Hello, hi. My name's Jerry Miller. I'm the founder of Trendsignal, the trader education company. And this is part of our Monday Market Insight series. And today we're going to be talking about interest rates rises in the US and the UK. Last week we actually talked about what we're expecting regarding interest rates. But this week we're going to talk about the outcome of those expectations and the impact on the markets and what we can expect here in the UK. So first of all, we're going to have a look at the market reaction. Um, Rather perversely, the US market rallied sharply, had one of its biggest rallies so far this year, uh, following news of a half point rise. And you might think this is rather perverse, and it was a perverse reaction. The reason cited certainly came out in the um, press conference afterwards. Jay Powell, the chairman of the Federal Reserve, basically said that they weren't considering extreme measures such as a three-quarter point rise in interest rates. And these are significant moves. Half a point move is significant. Three-quarter point move would have been very significant. The market latched onto that and it duly rallied, which was rather bizarre. Let's just have a look at the intraday chart, and we can see here the extreme nature of these moves. So this is the 7 o'clock bar just before the announcement here. We're just looking at a 30-minute chart, and you can see straight after the announcement and then start of the press conference, the market absolutely roofed. Something that I wasn't expecting and not many people were expecting. But actually overnight and then from 1:30 the following day, the market completely reversed those gains from the previous evening and ended up lower on the day. There's a significant amount of volatility. And of course, all that traders were doing were refocusing on the fact that, yes, we do have inflation in the US, and there are two more half point rate rises expected in the following Fed meeting. So by the end of the year, we're expecting interest rates to be at 3%. Compare that here in the UK, possibly one and a quarter percent. There's a big gulf between the US and other developed countries' interest rate expectations. Outlook for the UK's economy growth and inflation. The Bank of England actually cut its forecast for growth in 2023 and 2024, whilst at the same time it also forecast that inflation was going to rise just above 10% before it started to fall. Um, Andrew Bailey, the governor of the Bank of England, also warned that the UK could enter a recession, although the technical description of a recession is 2 quarters of negative growth, i.e., a contraction in GDP over 2 quarters. GDP's data is released obviously after the end of the quarter, and so we won't know about that until the end of the year, or if not into the new year. Some analysts actually believe we're probably in a recession at the moment, although not, as I say, a technical recession. But the big worry for the UK and the monetary and the central bank, the Bank of England, is that we are going to experience a significant fall in growth prospects, whilst also inflation is going to remain high. And this is something that economists refer to as stagflation, and it's not something that the markets are going to enjoy. If you saw what sterling did on Friday, in fact Thursday and Friday, Thursday it had a big fall, falling down to below the 123 level against the dollar, and that's the lowest level it's been in 20 years. Sorry, in 2 years, should say, not 20 years. Certainly since the start of the pandemic. So these are significant falls, and they reflect the where the UK economy is at the moment, and it is going to be struggling. Okay, so are we heading for a recession? I I think it's possible. I think when we get the new price cap in the autumn for energy bills, they'll be going up again. And whilst we may not necessarily call it a recession, I think for most people it will feel like a recession as the cost of living crisis really starts to eat into disposable incomes. This can only lead to a reduction in economic output and consumer spending, which is bound to hit growth and bound to um, be reflected in the GDP numbers. As I say, it's possible we could escape the technical description, which is 2 quarters of negative growth, but it's going to feel like a recession no matter what. That's it. Thank you.